Time now for the report. Rick Santelli, hopefully you've got the numbers for it.
Yes, the August numbers for the Consumer Price Index. Headline number expected to be down is up 1/10 instead of down 1/10. And do remember, the high water mark there was in June when it was the highest level since 2005, when it was up 1.3%. Up only 1/10, of course, is the lowest. Well, since last month, we're unchanged. If we strip out the all-important food and energy, and do understand, gas was down, 26% month over month. It's food that we have to pay attention to, up 0.6%, double the expectation. And the high water mark there is up 0.9. That was in April, and that went back to 1981, up 0.6. Well, if you look at up 0.7 in June, that's kind of our comp. Now, the year-over-year numbers, expecting up 8%, up 8.3 on year-over-year, up 8.3. High water mark there was, of course, 9.1. That goes back to 1981. 8.3 equals April, and it is the lowest level since February when it was 7.9. And if we strip out the all-important food and energy on a year-over-year perspective, it's also hotter than expected, up 6.3%. We're expecting up 5.9. The high water mark there, up 6.5. That was in March. That was the highest since 82. So when we see 6.3, that actually now is the highest since March of when it was the highest since 82. We've had 4 months in a row where it was moderating a bit. We'll call an end to that. Now, as we look at interest rates, we can clearly see that there's a lot of two-way action going on here. But for the most part, we're at 339 and a 10. That's up about 4 basis points. And we were at 329, down 7. So you can see there's been a big reversal. And the panel, of course, is going to discuss this. The thing that really bothers me with regard to inflation is everybody here on this panel agreed months ago that one of the reasons inflation was high was all the government spending. And after we agreed on that, what did the government do? They spent more. Student loans, welfare in terms of the CHIPS Act. Seems like nothing is sinking in. These numbers aren't better than expected, and maybe they should be, and maybe ultimately they're going to start to go back up again because we continue to go back to that well of debt and spending. The gang, back to you.
Yeah, we've had policymakers on, and to there are no exceptions that they don't cop to that at all anymore, Rick. It's supply chain, and gas prices have been coming down, and all our efforts are working. And one representative just said, just to be clear, like I was asking like insane questions about whether we should still be spending, but I don't know. Austin, or let me. How about you, Steve? What are you seeing there? Give us some more details.
I think the important story of this, Joe, I'll get to the detail in a second. The important story is the Fed just erased the 75 basis point hike that was written in pencil and wrote it in red ink. I think this moves them to 75 for sure at this point because they didn't get the help they were looking for. And I'll tell you where it didn't come from. Rick was 100% right to point out food. I think that's the reason why you didn't get negative. What was it? 0.08 on the food number. That was a big thing. 0.8 on food. Food at home was up 0.7%. That was over on the core side. On the headline side. On the core side, two things. One is I am not seeing, Joe, some of the deflation from the excess inventory that people thought was going to show up. I'm seeing goods prices up a bit. I'm not seeing too many negative numbers. The one negative number I see there is used car prices down actually less than had been expected by some forecasters I was reading, down just 0.1%. And then you have this a new car number up in a pretty healthy way. The other important component here is the housing component. Owner's equivalent rent used to figure out the cost of housing up 0.7%. There may be some moderation in rents out there, Joe, but it's not showing up yet in the inflation number, so it's not helping out the core. It hurt the core. And what you remember, Joe, we had this lag before it came into the inflation numbers. It looks like there's going to be some lag getting out if that's true at all. So Fed has more work to do, I think, is the bottom line.